What's up guys, my name is Adam and this is Broke Man Finance. In my last video, I talked about 3 SPACs that I was bullish on that I thought that in 2021 we could see some pretty good returns on. I asked at the end of the video what SPACs you guys were watching, and there was one that seemed to keep popping up that it got mentioned numerous times, so I dove in and well, here we are. And that is Electric Last Mile Incorporated, or ELMS, who is currently in the merger process with Forum Merger III. Right now, Forum Merger is trading for $12.29 per share at the time of this filming. After reading through ELMS' investor presentation, I started to get the feeling that they were undervalued in comparison to other EV companies. Or actually, in reality, it could be that a lot of these other EV companies are just way overvalued. Now, this is another EV SPAC play. It's another EV SPAC play in what feels like a competitive and saturated market. But you got to remember, it's not the first ones in the market that always survives and becomes the most profitable. And I get it. You're probably sitting there saying that you're tired of hearing about EVs and SPACs in the same breath. I get it. I get a little annoyed at it myself. However, we can't be so callous to the idea or closed-minded to the idea of new EV SPACs coming to market that we miss an opportunity to pick up shares of a really good company. And now that you're open-minded to it, let's get into why this may be a great undervalued play right now. Before we get into the presentation, do me a favor and check out that description below. There's a lot of great links in there that can be great resources to you and tools to use to help you make money. First off, you may not recognize him, but this is Jim Taylor, and he is the CEO and one of the founders of ELMS. I say you may not recognize him because he is also the former CEO of YouTube favorite Workhorse. People tend to forget that Workhorse has been around since 1998. Actually, I think that's when they first started trying to get this USPS contract. Maybe by 2028, it'll actually be announced. Jim was also the President of Cadillac and the CEO of Hummer. So my man has some legitimate credibility in this field. These guys are taking the success of the same style delivery van found in China and are trying to replicate that success in the USA. You can see here they mention it was the top selling commercial electric delivery van in China in 2020. Now, moving on down the presentation a little bit, we're going to talk about a couple things that stood out to me from some of their highlights right here. First off, there is a $1 trillion North American e-commerce market and has driven the need for lower cost delivery and fleet efficiency. Remember what I mentioned in my Lucid SPAC video. You measure a EV company based on its efficiency level. How much juice or efficiency can you squeeze out of that thing? But in reality, we are becoming more dependent as a society on deliveries. We want everything to be super convenient. We don't even want to leave our houses anymore to do any damn thing. I mean, Amazon has to be the most obvious right here. We have DoorDash bringing us our fast food. We've got subscription services now, like with one of my favorite companies, Chewy. They just bring your pet food or whatever products on a scheduled time, once a month, whatever, but there's lots of different subscription services out there. You got Walmart trying to do the same day grocery delivery. Point being, we as a society, we're creating more and more demand. And as we create more and more demand, that market that I mentioned feels saturated becomes much less saturated and shows that there's a lot more room for companies just like ELMS in this market. The next thing I like about this company is that the product thus far is proven based off the China numbers. This is not just a shot in the dark as it would be for some of these other EV startups. They actually have a plan and they already have something down that they feel like can be replicated here. They have an anticipated first mover in commercial Class 1 electric vehicle segments in the US, meaning these vans are the only EVs of their size. Plus, they have the lowest total cost of ownership. They're cheaper than everybody else, including some of their gas competitors. They have a state-of-the-art connected data platform, which helps accountability-wise for these companies that purchase these vans. ELMS comes with a software that helps keep track of what their drivers are doing. And they have a disruptive customization model, meaning they can customize these vans to whatever the company is needing it for. Efficiency and innovation. That combination, that recipe breeds revenue. They have a new manufacturing plant in Arizona that is capable of pushing out 100,000 vehicles a year. They already have 30,000 pre-orders. That's $1 billion in anticipated revenue in the pipe. The conservative model assumes 5% penetration of the delivery vehicle market would lead to a $3 billion revenue business by 2025. Being the first to market with that Class 1 van doesn't seem that far-fetched that they could not seize at least 5% of the market. That does seem fairly conservative. Proceeds from the capital raised is expected to enable profitability starting next year, and that's without any additional future capital raises. They're expecting to be profitable by next year. That is something a lot of companies and startups, especially EV companies, cannot say. Here's a few of their customers, and obviously you're going to see some very recognizable names, but the one that I'm eyeballing, because I'm expecting a massive contract at some point from this company, is Walmart. Walmart's been wanting to compete with Amazon over same-day delivery, as well as same-day grocery delivery. They don't need a big box truck from Workhorse. They need one of ELMS' vans. Plus, ELMS has refrigerated trucks for those groceries. Now, I'm not saying that Walmart's going to give ELMS some massive contract, but I could see a company like Walmart giving them a substantial amount of revenue every single year. And as I mentioned earlier, they're the only EV in this class. They have more room. They are cost effective compared to their competitors in overall cost, maintenance, gas, etc. Only 15% of U.S. consumers have their delivery speed expectations met. I mentioned that earlier. We want everything faster and faster and faster. This market, in reality, may not be as crowded as we thought. There's 85% of us standing there saying we need it quicker. And a company like ELMS can actually make that happen. Last mile delivery services has a 13% CAGR going into next year, and the demand for delivery vehicles has an 11% CAGR going into next year as well. Not only is ELMS letting everyone know that they are going to have the cheapest cost to owners overall, not only that, but the vans are going to be completely customizable to fit the need of the buyer. Not only that, but they are getting the vans out faster than anyone else. So not only are they the cheapest in town, not only are they customizable to whatever needs you need, but you will also get these things faster than anyone else. They are completely prepared to put these things into production and get them out quick. I haven't even gotten to their software, so supervisors can monitor their employees' driving habits, which is huge for accountability. And foreign merger is no stranger to the SPAC game. You notice that it's foreign merger the third, right? Foreign merger 3. You can see here the original foreign merger took one company to market in 2018, and then foreign merger the second, or foreign merger 2, took another one public that I'm very bullish on, and that's Tattooed Chef. So for this one, I'm hopeful they have picked another solid winner in this SPAC with ELMS. It sounds like ELMS has a solid plan to profitability by next year. Their vans are in demand. They have a proven business model and product. Their leadership is experienced in this field, and it sounds as if they know how to be competitive with their price points for that product. All of it sounds great. But right now, they're not producing anything and have no real revenue coming in. That's the gamble. That's the decision that you have to make. Right now, they are sitting at a very reasonable $12 and some per share. But they're unproven as a company. They have all the makings to be 100% exactly what they say they're going to do, but they haven't yet. So do you buy in now with the anticipation of them doing what they say they can do, or do you wait for them to prove themselves, and then you may be looking at a share price of $100? Who knows? That's the gamble and the decision you have to make. But if they do what they believe that they can, I think we're looking at an EV company right now that not a lot of people are talking about, and that is completely undervalued and will be a steal at $12 per share. But remember, I'm no financial advisor. I am just a guy on YouTube. But I do like the company, and if I was a financial advisor, I would rate this one a buy. But let me know what you think in the comment section below. I would love to hear your thoughts. As always, I hope those stocks stay green. I hope you stay safe. I hope everyone out there takes care.